Let's get back to money. This Monday morning, it's worth looking at futures because we're going to open up all over again. Huge week last week, and we're up well into the triple-digit level this morning when that market gets going. Dennis Gartman joining us now. All right, I've got a weak jobs report. The Fed may lower interest rates, and we've got this no tariffs on Mexico. Am I missing something out? Is there another reason why this market's rallying?
No, those are three good reasons, and why should it not? We walked in last Monday, and remember, I trade only for my own account, and I came in actually short last week because at that point we had tariffs going on in effect in Mexico. We didn't have yet a change in Federal Reserve policy, and now that's all changed in the course of a week. It's been extraordinary, and as Marty Zweig, one of the great market watchers of all time, bless his soul, used to say, "Don't fight the Fed." I fought the Fed, I lost. Fighting the Fed is an ill-advised decision on my part, and clearly stock prices seem to want to go higher. I'm surprised by that fact, but they do want to go up.
For your own account, are you now no longer short but going long? In other words, are you now buying?
It takes me a while to get to cover, so I'm still I still have marginal net short positions. I'm quietly, marginally, modestly net long, but I still have short positions on, and I have to try to get them back in. So it's a matter of covering in a few more this morning and buying a few more stocks to go long. I'm marginally net long and have been for about 2 days, but it takes me a couple days to change. I'm like an aircraft carrier. I don't change that quickly.
Or an oil tanker. Turning around is rather difficult.
Or an oil tanker, absolutely.
But wait a second. Am I right in saying that if you look at the market, there are some indicators suggesting that the market expects 2, maybe 3 rate cuts this year? Is that accurate?
That's very accurate. That's exactly what's going on. You take a look at the Fed funds futures markets. They're already anticipating, given no question, 1, 50% probability of 2, and I think 20 or 30% probability of 3. Remember, the Fed does not lead rates. The Fed follows rates. The market sets rates. The Fed follows later. And the market is telling you that the Fed is going to move rates over the course of the next 6 months to a year. The economic data that came out on Friday would give them cover to move, if not at the next FOMC meeting later this month, perhaps certainly in July, and almost certainly by September, a 1.5 or 2 cuts by that period of time. So yes, Stuart, the market is saying 2, maybe even 3. I think it would be very difficult to get a third rate cut before the end of the year, but 2 is a given at this point.
But it sure looks different this Monday morning compared to last Monday morning. I mean, it's like day and night, really, isn't it? It's day and night.
It's like day and night. Last Monday morning, the world looked like it was coming to an end because of the imposition of the Mexican tariffs.
That's right.
And there was not the Fed turnaround. So, yes, things changed rather dramatically nowadays in the course of a week. It shouldn't, but that's the world in which we live, and that's Dennis, the world in which we have to trade.
You and I have to start moving faster, and that's a fact. Mr. Gartman, thanks for being with us this morning. We'll see you again soon, promise.